Looking outside Africa now, an attack on a container vessel sailing through the Strait of Hormuz has prompted some ship owners to review exit plans, but traffic continued to through the vital thoroughfare, and 2 fully laden tankers are heading out of the Persian Gulf, while 4 empty inbound, very large crude carriers are among the vessels sailing along the Omani coast. Ship tracking data shows this. Now, this southern route is managed by Oman and coordinated by the United States. Meanwhile, the UN's International Maritime Organization has paused the planned evacuation of more than 11,000 sailors stranded in the Strait of Hormuz after a cargo ship passing through the waterway was attacked. The British Maritime Security Agency reports that a ship had been struck 7.5 nautical miles southeast of Oman's port of Dahit by an unknown projectile. No casualties were reported. U.S. officials said that Iran had fired on the ship, according to U.S. media, and the body set up by Iran to manage the strait said vessels passing outside designated routes would not be guaranteed safe passage. Hundreds of ships and thousands of sailors have been stranded in the Gulf since February because of the U.S.-Israel war against Iran. Palm oil advanced on rising Malaysian exports and expectations of better demand from the biggest buyer, India, as festival season nears. Benchmark futures we saw rose 4,600 ringgit a ton on Bursa Malaysia derivatives, impairing a weekly loss. Malaysian exports rose 11% in the first 25 days of June compared with the previous month, including higher shipment to India. And traders are saying that exports increased by a similar amount. I guess we'll see signs of that by midday today or intraday market when we come for Business Incorporated, if indeed there will be a recovery before the end of the week. Away from the United States, Tokyo Consumer Price Index inflation rose from a 4-year low in June, with core inflation also rising amid higher energy prices stemming from the Middle East conflict. Core CPI, which excludes volatile fresh food prices, rose 1.6% year-on-year, and government data shows this. The print was in line with expectations and accelerated from 1.3% in the previous month. Headline CPI grew 1.6% year-on-year, rising from the 1.4% in the previous month. And Chinese automakers may be nearing a demand floor after a difficult second quarter, but a meaningful recovery is unlikely before late summer. This is according to Morgan Stanley analysts. The brokerage said that recent discussions suggest vehicle sales have stabilized, though consumer demand remains weak and earnings catalysts are limited in the near term. The analyst said that June sales should prove stronger than headline data indicate, helped by extended mid-year promotions, government subsidies, license plate incentives in some cities, and lower fuel prices. Well, Morgan Stanley expects July to remain seasonally soft, with a more meaningful rebound potentially emerging in August and September as new model launches, and there's also supportive policies and seasonal demand factors converge. Samsung Electronics and SK Hynix are set to unveil massive long-term investment plans focused on semiconductors, artificial intelligence infrastructure, and other advanced technologies at a government event next week. South Korea, according to reports from that country. Well, the report said that the investments would exceed 1 trillion won, that's about $646 billion, and it will be spread over the next decade, potentially marking the largest corporate investment commitment in South Korean history. This war is still going on in Ukraine. The president there, Volodymyr Zelensky, has approved a 40-day operation to influence Russia into ending the war after receiving briefing from the head of his security service on strikes against Russian targets. Mr. Zelensky offered more details of the plan in the post, which he shared on his social media, but he praised the performance of Ukraine's security services in defending the country's positions on the front lines through the use of drones. Yesterday we saw red color on the crypto headlines continues today. Guess what? Bitcoin has dropped less than 60,000, remaining close to its lowest level this year after the Federal Reserve's preferred inflation gauge climbed to its highest level since 2023, keeping interest rate hikes in play. The world's largest crypto was last down 1.7% to $59,936.45, remaining close to a 1.5-year low hit in June. And the crypto markets remain under pressure from growing expectation that the United States Federal Reserve will either keep interest rates high for longer or even raise them further this year.